Alibaba stock down around 70% this past year, and a lot of Chinese stocks free falling today, down around 15 to 20%. Why are they falling down? Well, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, we're going to talk about Alibaba stock as well as some of the latest news and why many Chinese stocks are collapsing. If you enjoy educational investment videos like this, please make a point of hitting that thumbs up, hit that subscribe button. And so looking at what's actually driving this on a macro perspective, this past weekend was the 20th Communist Party National Congress, and there was a very public removal of former President Hu Jintao. This was as Xi Jinping secured an unusual third term as president. Overall, watching that video, seeing the pictures of Hu Jintao being pulled out, that was really uncomfortable for me and clearly uncomfortable for investors around the world. You're effectively saying, hey, Xi Jinping is now effectively the modern day emperor of China. It does make you say, hey, there's greater fragility there. There's greater risks here when you effectively have one man sort of driving a party, driving a country. And arguably, he's leaving many of the things that have made China work for the last few decades behind, talking about, leaning in towards Marxism versus the Chinese capitalism, with Chinese characters. And so that is the concern of like, hey, if you have this new emperor that's changing the rules, could you have a dramatic change in system where you no longer have the growth rates, you no longer have the fundamentals that can lead to prosperity, not only for the middle class in China, but also for outside investors, as you saw previously over previous administrations in China. And there's also the risk that, hey, there's this new clean sweep of power. He's kicking out anyone that might disagree with him. And this was done in such a very public, almost humiliating way that it's sort of saying, do not question his authority, do not question his power. And that does, make investors around the world extremely cautious, because when you see a move like that, does that mean he's more amped up for war, for, let's say, invading Taiwan? And you're seeing, news from Secretary of State, from the U.S., Blinken saying, yeah, Beijing is speeding up plans for unification. You see very astute, investors saying Xi's wartime cabinet is in place. They purged not only during the purge of the 20th Party Congress, they not only installed loyalists, but 2 spy chiefs and military leaders responsible for China's reunification with Taiwan. So clearly gearing up for potentially moving on Taiwan sooner than investors were expecting, elevating the risk for Chinese stocks. And so then another aspect of why Chinese stocks have gotten absolutely hammered is you look at what was said throughout the Congress, where Xi Jinping effectively opened it up, talking about promoting common prosperity. And, you might say, well, what's that actually mean for shareholders, or what's that mean for investors? And he talked about regulating the order of income distribution and regulating the mechanism of wealth accumulation. That is another component that, gets investors cautious of like, hey, does that mean extra taxes or preventing businesses from returning capital to the ones who effectively provide capital to these businesses, to shareholders? Does that mean you're going to stop seeing repurchases, in the months or quarters ahead? And that's a clear thing that I'm going to want to see, because I've seen Alibaba, which in full disclosure, I do own a little bit of, they've actively bought back more stock, sort of saying, hey, we recognize what's going on in the marketplace. We are returning more cash to shareholders. That's a shareholder-friendly action, and they've advocated doing that. So if you see leadership start talking about regulating the mechanism of wealth, what does that actually mean? Does that mean just property taxes to prevent property bubbles in the future? And that's definitely a problem that they're working through. So it's a lot of questions like that. It's that extra uncertainty. You're dealing sort of with the fog of war here, and that's what you're looking at with the stock price. Clearly, dropping 15 to 20% today. As if that wasn't enough, because the Chinese economy has been weak, they've also been weakening their currency, arguably on purpose, relative to the US dollar. And so you not only have weak currency, greater uncertainty, but you have these currency headwinds with in any investment in China right now. So the question is, where does Alibaba go in the future? What happens to Chinese stocks going forward? We're going to talk about that in just a second. First, if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. And in full disclosure, this is not financial advice. when I think about Chinese stocks, I really have two different minds about it. I think it's important to be honest with oneself and sort of say, well, what am I looking at here? The pros and cons. On the downside scenario, you're possibly talking about a donut. You're sort of saying, hey, there's greater risk of war. And if there's, let's say, an invasion in Taiwan, what's the risk that, let's say, US investors, maybe global investors, won't even have rights, or that they'll lose whatever rights they have, where, let's say, even the US could respond and say, hey, you're no longer allowed to own, let's say, Hong Kong securities or Chinese securities. I mean, this is on top of the fact that a lot of these Chinese ADRs are already in the process of getting delisted. That's already in motion. So you do have this sort of concern. Now, delisting doesn't mean that you get wiped out. It means it trades, over the counter and it's less liquid. But you do have these sort of questions. I personally buy my, if I'm going to buy, Hong Kong shares, and that's what I've done in the past. I do it through Interactive Brokers. There's a link below, but that is the risk. The China macro risk is certainly more elevated and higher than what I initially looked at and thought about when I purchased, my Chinese, my Alibaba stock and a few other, Chinese stocks. So clearly I was wrong about that. It's important to call that out, but it's also sort of saying, hey, this picture got a lot worse. You now have effectively a modern day emperor in China. And what's the risk that there's war, effectively as different superpowers sort of confront, sort of saying who actually owns Taiwan. Clearly China has very, very strong feelings about it, sort of saying this one China policy, but the world relies off of Taiwan semiconductors, those Apple iPhones. That's what you're looking at there in terms of the latest cutting edge chips, those 5 nanometers that really aren't being produced anywhere else in the world. So this is a huge flashpoint, and we'll see how that plays out. So on the one hand, you sort of see, hey, Xi's putting these pieces in place for a potential invasion of Taiwan, or maybe sort of preventing any trade from happening, so they're sort of default have to sort of accept Chinese rule. So there's a lot of concerns there. And there's also this concern of like, hey, why are you talking more about Marxism? What's worked for the last few decades is, capitalism with Chinese characteristics, where you're sort of attracting outside capital to invest. When you're talking about regulating the mechanism of wealth, I think it's what's happened recently arguably is really hurting the long-term prospects of Chinese economy. Like the entrepreneurs in China, are they really going to be excited about starting a new business, starting a new venture when you're getting these sorts of pressures? I think Jack Ma used to be looked up as a hero, one of the founders of Alibaba, and then he disappeared after speaking out. Now, arguably there was a bit of hubris there where, he was talking about effectively the old farts and, the CCP and how they didn't know anything about the banking sector. So maybe he went a step too far. But it's important for a society to have heroes like that, for people to say, hey, I'm going to go start that next company. I'm going to make that investment. And if you remove that, what happens to that society? Does that mean you're actually looking at a structurally lower growth rate in the years ahead? I'm trying to look at both sides of the setup here, both sides of the investment framework for China. On one, this is very, very concerning, and arguably the risk of a permanent impairment, a zero for the Chinese stocks, has arguably gone up materially. The other side, side of the coin, when you look at it, is like now the stock price has fallen so much, you're looking at the actual free cash flows, looking at the actual price. I mean, this company's, Alibaba, is now worth well under $200 billion. This company, is the equivalent of one of the top Chinese companies of the world. You look at some of the top US companies of the world, $1 trillion plus company. Here it is, China, under $200 billion company. Now, largely because of the things that we're talking about in this video, Alibaba does have some company-specific problems that they've sort of lost market share to, let's say, JD.com, and there's been some competitive pressures. But still, looking at this business, they've talked about repurchasing more shares. And with the stock price where it is, if the stock price just stays flat, they could arguably buy back somewhere between 7 and 15% of their stock per year, based on sort of the buybacks that they've talked about in the past. And so this is, on the flip, talking about the bull argument, you might even be rooting for an even lower share price, because if you truly believe the free cash flows will get returned to foreign shareholders, then you'd say, hey, and that's what's happened over the last quarter or two, where they've amped up their buybacks, by a couple of $1 billion. So then you might say, hey, I hope the stock price goes even lower. in which case Alibaba management can buy back even more stock. And so that might be one, way to look at it, just based on the free cash flow and the potential shares that they can repurchase. Looking at this company, the last 2 years generated between, let's say, 100 billion RMB and 172 billion RMB. So trading at like 7 to 12 times free cash flow for a business that clearly is still investing in a lot of growth initiatives, including international commerce, local consumer services, the Alibaba Cloud. These are all earlier stage enterprises that do have long-term growth trajectories that could be much more profitable in the years ahead. And, it's very, if you wanted to look at the bull side, you'd say, hey, those segments get zero value in the current, valuation. And maybe that's, the market sort of saying, hey, I don't trust that I'm going to be able to walk out of this alive. This is getting a zero. And that's effectively what the market is saying today. You're heading towards zero. But the question is, will long term, that's why I have these two minds about it. The macro risk is certainly bigger than I initially expected. That risk of a permanent impairment, that risk of a donut is certainly higher than I initially expected. But I'm also looking at the cash flows of this business, sort of saying, hey, this is, still very interesting. And they have got a lot of, very attractive businesses over time. And then you look at folks like Charlie Munger, one of the greatest investors around. He's running the portfolio for Daily Journal. And not only does he still own a stake in Alibaba, it's one of the top positions, but he's actually borrowed money using margin, against this portfolio to buy, foreign stocks. So he did trim Alibaba a bit, like about 2 quarters ago. But still, looking at this, I mean, it's incredibly interesting to me to think like, wow, he's either completely out of touch or it's just incredibly ballsy, to margin against your portfolio. It's unclear what position it is that he owns that he's been margining against. And then the last thought is, it sort of reminds me of this study of what were the investment accounts that actually really outperformed over time. There was a study, I think it was based on Fidelity, looking at some of their accounts, where they found out that some of the best performing individual like retail accounts were actually accounts where the owner had either died or gotten to a coma or just forgotten about it. And I think it's because of dynamics like today where you sort of say, hey, like, oh my gosh, this news, this headline, the Hu Jintao, this is terrible. What's going on? You have a modern day emperor. Is this war? And so that gets the animal spirits so that a lot of people sell. Whereas the folk that like the guy who had a coma last night or fell into a coma last night that was 100% Alibaba, like maybe he's better off not knowing that the stock price is dropping, 15, 20% today, because maybe in the next year it doubles or more than that because of how cheap it is. So that's really the question of like, well, what happens from here for Chinese stocks? I have multiple different perspectives on it, purely on the financials, the cash flow, the fundamentals. If you do not factor in the macro risk, then you'd say, hey, over the next 5 years, this thing easily has several hundreds of % upside. So on the one side, folks might say, hey, now's the time to buy. On the other side, you have folks that say, you're absolutely mad to even consider this. Now is like, if you hadn't sold Chinese stocks earlier, you should be doing it now. It's very clear that they're heading in the wrong direction. And there are a lot of red flags there. And I do agree that some of these latest policies suggest they are heading in the wrong direction. Like the latest policies consolidating power, sort of the humiliation of, taking out a former leader in front of everybody, it's in front of the whole world and sort of kicking him out of the Congress. Like that doesn't help you out long term. And so you look at that, clearly not good. And then you have folks that are like margined. I wonder how much of today's drop is because of margin investors are blowing up. And then you have the last mindset of like, hey, maybe you just sort of sit on your thumbs and you just sort of say, I'm going to sit here and let's see how this plays out. So I'm very curious if you have a take on how you think either Alibaba, Chinese stocks are going to play out. If you're buying, you're selling, would absolutely love to hear it in the comments below. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thank you so much for watching Unrivaled Investing.